Hi everyone, welcome back to the Property Finance Podcast, and today we're carrying on our series of FAQs. And one of the things that I've been asked recently is, obviously with the changing market and interest rates going up, down, left, right, everywhere else, people always want to know, well, what happens to my mortgage payments? And the simple answer when it comes to buy-to-let HMO service accommodation is, as long as you're on a fixed rate, absolutely nothing. So you are fixed in until your fixed rate ends, and then at that point you then obviously go on to the variable rate. If you're on a variable rate or a tracker, obviously that's where changing interest rates obviously will send your payments up or send them down. So when it comes to a buy-to-let, service accommodation, HMO mortgage, commercial mortgage, whatever, as long as you're in a fixed rate, nothing changes whatsoever. If you're on that variable or tracker rate, obviously that's where it'll have an effect. So nothing to worry about unless you're on one of those. If you're on a variable or tracker, obviously you may look to refinance as interest rates stabilize, etc. But while they're coming down, obviously it's of benefit to you. When it comes to bridging finance and development finance, it's slightly trickier. So what will happen is when you go for a bridging loan or a development loan, the lender will either be on a fixed rate or they'll be on a variable rate. So what will happen is when you're issued with a set of terms, you will essentially get those. It will say whether it's fixed interest or variable interest. And then obviously what happens is you look at that and make a decision, well, do I want to be on a fixed interest rate or do I want to be on variable? And then what will happen is if the interest rate goes up or down, obviously that's what then has an effect on your interest rate. When it comes to bridging and development finance, obviously they're shorter term finance. So you just need to make that decision as to, for the next 12 months, if you're taking a bridging loan, if you're taking a 12-month bridge, over that next 12 months, do you think interest rates are going to go up or do you think they're going to come down? Obviously, if you think they're going to come down, then being on a variable rate obviously could be of benefit to you because you may see that benefit partway through your bridging loan. And same with development finance. If you're on a 12, 18 month, if you think interest rates are going to come down, obviously that's where it'll have an effect. If you're on a bridging loan and you're servicing the interest, so paying it monthly, you may, if interest rates come down or go up, etc., and you're on a variable, that's obviously where you will see a change in those payments that you're making. If you're on retained interest and you're on a variable rate, obviously when you come to redeem the bridging loan, that's where you'll see the benefit, is because when they calculate the interest, obviously if interest rates have come down, obviously that redemption figure will be lower. Same on development finance. You're never going to be paying monthly on development finance. There's no one that I've ever come across in 8 years that's ever wanted to pay their development loan off monthly. But when it comes to that redemption figure, if you've obviously rates have come down or gone up, etc., that's obviously where you'll see the impact on your redemption figure. With development finance, what I would say is, given that developments are so up and down, obviously we don't know what's going to happen with GDVs, etc., I would always kind of advise clients to stick with a fixed interest rate because it feels like then you're going to have that benefit of some stability on your interest rate throughout the transaction. With bridging finance, obviously it's a little bit more fluid, shorter term, so going for a variable rate on a bridge isn't actually going to have that much impact potentially. So worth looking at those and considering all those options. But realistically, that's what's going to happen if there's any changes to base rate, interest rates, etc. Throughout the term of your mortgage. Hopefully that helps. Hopefully that gives some clarity. Thank you very much for listening. Catch you on the next one.